strong start for the Indian market. Nifty rallies to trade around that 17,400 mark, led by metals and the IT sector. All sectors except FMCG trade with gains. The mid-caps outperform.
Bajaj Finance among the few losers today after new loans declined sharply in the second quarter, even as assets under management post the highest growth in 11 quarters. Brokerage, well, they remain mixed on the stock.
The Competition Commission of India approves of Zee's merger with Sony, although with some modifications, the stock trades higher by 5.5%.
North America Class A truck orders hit a record high of close to around 56,000 units in September. Bharat Forge surges 8%.
Godrej Consumer reports a mid-teen decline in EBITDA, sees constant currency sales fall in Indonesia, also says industry trends remain soft in the quarter gone by, as a result of which the stock lower by 5%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me is Mangalam Malu. Hey Mangalam, as we pointed out earlier today as well, chasing the gap up must have not been such a great idea. But if you bought the intraday dip, well, we'll be making some money. And as we speak, the Nifty is moving back towards the high point of the day. Remember, we went down to around that 17,340 odd. From there, we have bounced close to around 80 points. The stock that's actually moved in the last 10 minutes is ITC. Just pull up the intraday chart on that one. That's surging, moving to the high point of the day. And that's the one that has a good amount of weightage, helping the Nifty move higher. But to find out what's the trade from here on, well, we're joined by Sachidanand Utekar. Hi, Sachi. Morning. How would you trade the index? 17,415 is where we're at. Levels you're tracking and your trade at this hour?
Good morning, Nigel. Good morning, Mangalam. Clearly, it's a very strong bullish day, and the way both the indices have managed to sustain about their 20-day exponential moving average, which is commendable. Here, if you look at the data of Nifty, purely it looks like a bullish day wherein 17,500 may emerge as a very strong resistance. So we are not expecting an expiry about 17,500. Probably the support at 17,320, which is the 20-day exponential moving average, even that may not be breached. So the reward to risk at this point of time in Nifty is a little bit skewed. But when you look at Bank Nifty, clearly the expiry pain is somewhere close to 39,800 as of now. And the way ICICI Bank, Axis Bank are supporting this particular trend, I think Kotak and SBI are still behind, but still there's a good margin on the upside which is left. So I think Bank Nifty should be on your radar. When we look at the entire setup, we don't see it slipping below 39,300 on a closing basis. So probably one can keep a stop loss there and look for some buying opportunities when it comes to Bank Nifty. The expiry zone could be somewhere close to around 39,700, 800. So there's a good amount of unwinding which can kick in once 39,500 level is breached. So we are expecting this bullish momentum to continue, and especially focused on banking.
39,800 is where the 20-day moving average of the Nifty Bank is as well. So maybe some congestion only above levels of 39,800. But up until then is something that the Nifty Bank can go ahead and traverse. As we speak, closing in on that 20-day moving average for the Nifty as well. 17,450 is there where it stood. Individual stocks, what do you have on your list this morning for us, Sachi?
Mangalam, Autopack is again gearing up for momentum, and here we have seen M&M again participating. So if you look at the entire structure on the daily scale, it looks like it has rebounded well from the broadening formation base, which is close to around 1220 levels. There's a positive crossover on its RSI, which has managed to sustain about the 50 mark. It's a good sign of strength. And if we look at the 5 and 20-day exponential moving average, again, there is a convergence on the positive side, indicating fresh directional momentum. So I think this is a good idea to build some longs in M&M, keep a stop loss at 1262. The immediate target is around 1310 and the positional target is around 1360. The other stock that has been on our radar is PVR. We discussed this particular stock last week as well. If you look at the entire setup, we have multiple bullish signs here. Declining wedge formation has been matured. We have a bullish hammer formation on its weekly scale. And if you look at the crossover again, it has managed to scale up above its 200-day exponential moving average. So here again, PVR can be bought in. From a trading perspective, we are looking at a price target of around 1910. Positional target would be around 1980. The stop loss should be placed at 1755, and long positions can be built in PVR as well.
Okay, all right, Sachi, thanks so much for stopping by, filling us in with your call on the index as well as on a couple of trading strategies. Well, let's move to our special segment there where we get a few ideas for profit from Money Control Pro. Sachin Pal of moneycontrol.com is standing by to tell us about a stock that he's tracking very, very closely. Sachin.
The company that we've chosen in our ideas for profit today is Cera Sanitaryware. The company has been a very consistent performer for the past several years and enjoys a market leadership position across faucets as well as sanitaryware. In fact, the demand momentum across both these categories appears fairly strong, and the plant utilization rates are at above 100% at this point of time. The company is undertaking capacity expansion for the faucetware division, and the same is expected to come on stream in the next 12 months. For the sanitaryware division as well, the company is evaluating certain proposals with respect to expansion. However, the timeline is expected to be almost 24 to 30 months. Well, while the overall building materials industry has been largely impacted by the spike in power and fuel costs, Cera's margins have held firm because natural gas prices constitute almost 3% of the overall cost of the company. Therefore, any spike in the power and fuel costs as well as the other energy expenses is unlikely to have a major impact on the margins of the business. Well, although the valuations of the business appear fairly elevated from a near-term perspective, Cera is a very high-quality play in the building materials industry, and therefore investors can look forward to accumulating the stock on every correction.
All right, take that point, Sachin. Thanks a lot for that. With that, we step into a short break. On the other side, we get chatting with the management of J. Kumar Infra. They've won a few awards. We will discuss that with them. Welcome back. As promised, let's get chatting with the management of J. Kumar Infra Projects. The company has backed a 350 crore order project from the Municipal Corporation of Greater Mumbai, MCGM as we know it. And how's the company's order book shaping up? What the outlook is for the business going on from here? And more importantly, when does the metro get completed? Well, we have a lot of questions, and to answer all of this, we have with us the managing director of the company, Kamal Gupta. Thanks a lot, Kamal, for joining in. Always a pleasure speaking with you. We see you getting a few orders from MCGM over the last few months. This is a heartening fact given the sort of history that you've had with the municipality. Currently, just wanted to know what proportion of your overall order book comes in from the MCGM, what your order inflows have been for this year, and the target for the remainder.
So yes, Mangalam, we have secured an order of 352 crores from MCGM. That is for construction of a 300-bedded Siddharth Hospital in Goregaon West. And our order book from MCGM is around 900 crores. That's it. It's not a very big chunk. So our total order book stands at around 12,095 crores as on 30th June 2022.
Okay, all right. Hi, Kamal. Thanks so much for joining in. So you're telling us your order book is at around 12,000 crores odd as of June 2022. Now, could you give us a sense about the total order inflow target that you have for FY23? I think it was at around 5,000 crores odd. Do you stick to that? And also, what about the execution? For this year, what kind of a revenue growth are we looking at? I recall you said margins will be stable at around 14 to 15%. So order book inflow as well as revenue target. Go ahead.
Sure. So we have so far secured 3 projects in this current financial year, costing around 1,700 crores. That is excluding GST. So one project is of Vadodara Mumbai Expressway, so which is of like 10 kilometers. It's a tunnel project. 4.2 kilometers of twin tunnels are there. And the second project, this project is of 1,070 crores excluding GST. The second project is of Mumbai Sewage Tunnel project, wherein our share is 306 crores excluding GST. And the third project is of Siddharth Hospital from BMC, costing 312 excluding GST. So as you told, we maintain our margin of 14 to 15% EBITDA. And sticking to our previous guidance, we expect an order inflow of around 5,000 crores by the year end of FY23 and we expect to maintain an order book of 12 to 13,000 crores by the end of FY23. Coming to the revenue part,
Go ahead.
Yeah. You're asking about the revenue expectation of FY23.
Yes.
So we had a very great Q1 results. We expect a very healthy performance in Q2 as well. As you know, we have been maintaining a margin of 14 to 15% and a PAT of 6.2% in the last year. We look forward to having revenue in excess of 15% growth in the coming year of FY23 while maintaining similar margin profile.
So that would mean revenues of close to around 4,500 odd crores. Is that on the cards for this year?
So we had 3,500 crore Mangalam like last year. So 15% plus. So anything between 4,000 plus.
All right, 4,000 to 4,500 crores with 14 to 15% margins. You know, I was interested in your long-term vision. FY27 is what you've guided for in terms of $1 billion in terms of revenue. That's almost 8,200 odd crores as we speak, with 14 to 15% margins and order inflows of almost 20,000 odd crores. Up until then, I just wanted to know a couple of big executions that you've lined up. The Mumbai Metro is one of them. When does the execution get over on that? How do you recognize revenues?
So coming to the Mumbai execution part, as you are part of Mumbai, I hope. So like we have already started one line, part of line 2A and part of line 7. We expect line 2A and line 7 to be fully operational by December this year, 22. And line 3, which is fully underground from Colaba to Ships. Phase 1 of that, from Ships to BKC, MMRC, we have completed 85% of the work. Tunneling is fully completed. Station works are undergoing. Even the electrification and track-laying by respective agencies are on. So we expect this line to be operational by December 23.
Well, if you could, instead of referring it to it line-wise, if you could tell us the location, the one that's getting completed by December 2022 is which one? Line 2A and line 7, I think so. You know, we have both Mumbaikas and all our audience as well is waiting by. So your stock performance could do justice to your shareholders, but all Mumbaikas will be waiting for this data point. So which one's getting operational in December 2022?
So, Neil, this is the line 2A is from Dahisar West to Andheri West, Nagar.
Okay.
Line 7 is from Dahisar East on Western Express Highway to Andheri on Western Express Highway.
Got it. Okay. So that'll be a fair bit of freeing up, Mangalam. So hopefully, we can travel, in a shorter duration of time.
From Dahisar to Andheri, yes, Nigel, but he, disappointed me by saying the Colaba to Seeps one is not happening anytime soon, and that's the one which actually goes from right under my house. Kamal, any visibility on when that happens?
So, Mangalam, sorry, I'm not able to hear you.
The one between Colaba and Seeps, that goes from under our house.
So, Metro Line 3, that is Metro Line 3 from Colaba to Ships. And the first phase is still BKC from Ships, which will be operated by December 23.
Okay, December 23. Mangalam, there is some hope for you.
You can directly go to the airport, whether it's domestic or international from this location.
Okay, we'll hold you to those numbers then. The other point that the street wants to know about is you have a good vision for the next 5 years or so, which is pretty good news. But what about your diversification plans? Now, Maharashtra and Delhi, I think together they constitute for close to around 80-85% of your total business. How does things turn, going ahead? Do you see a bigger contribution coming from Gujarat, from UP, from other places, maybe Chennai, Kanpur, I don't know. So could you tell us the non-Maharashtra, non-Delhi will be how much of your business going ahead? Currently, it's only around 10-15%. And the second part is also you have a high dependence on government projects. There is not too much private projects that come in. Will there be a larger contribution coming in from private projects going ahead? Go ahead, Kamal.
So yeah, Neil, of course, we are focused only on government projects. We don't take private projects.
Okay.
And as you see, there is a lot of traction in infrastructure projects, and it is all across India, whether it's Maharashtra or NCR, South, North, West, everywhere. So of course, since we are from Maharashtra and Mumbai, our major focus is always on Maharashtra. Maharashtra itself, as you must have seen last week, the government has announced around 5 to 6 lakh crores of project in coming years. Looking to India basis, like the NIP has an outlay of almost 111 trillion rupees in 5 years from 2025. There are more than 38,000 crores of projects lined up for metro. Central government.
Kamal, we're running a little short on time, but we want a very basic number. This is Nigel on this side. I just wanted to ask you, the non-Maharashtra and the non-Delhi contribution will be how much currently from 10-15%? Do you see it go to 20-25%? Or the core focus will continue to remain Maharashtra and Delhi? Go ahead.
So, of course, our core focus will be Maharashtra and NCR.
Okay.
Because we see a lot of projects coming in from that. But we are also diverging to south. We are putting in projects of metro projects of Chennai, Kerala, and we are also focusing in some Bihar projects. So, of course, like segment-wise diversification as well as geographical diversification will be coming forward from the next year.
All right, and
so
finally,
in the coming fiscal year.
Right, and finally, your asset turnover is the highest that it has been in the last 5 or 6 years, at least at 4.5. Does that mean you're sweating your assets a little more than that, and there could be some capex forthcoming?
We don't expect any major capex coming, Mangalam. But like as you see, we are continuously focusing on our execution and improving our efficiency. So that is the reason the asset ratio has gone up. And like there's no major capex coming forward. There will be only maintenance capex of around 50 to 100 crores every year.
All right, take that point. Thanks a lot, Kamal, for joining in, giving us your views. The street likes that, and we've seen a bit of a spike on your stock as well while you were talking about the plans going ahead. With that, we slip into a short break. On the other side, we continue our coverage on the markets.
Well, the Competition Commission of India has given the go-ahead for the Zee-Sony merger, albeit with certain modifications. Bahista joins us to run us through more details on that front. Bahista, take it away.
Hi, thanks for that, Nigel. Well, you're right. Zee and Sony, which were long awaiting an approval for their merger, have finally received the nod from the Competition Commission of India. And this is a big positive because the Competition Commission of India is usually the one which takes a bit of time in giving their approval, and hence it is a positive. The CCI had earlier raised concerns on the merged entities' market dominance in the TV viewership, the high fee from advertising that could be charged, the channel pricing and other parameters. Now for this, Zee and Sony had made submissions to CCI, and since found satisfactory, the modification in the proposal has finally been agreed to. Now the final order from CCI could take another approximately 4 to 6 weeks. There are also other pending approvals which are awaited from the Ministry of Information and Broadcasting. There's also a shareholders meeting which is scheduled on the 14th of October in the next week. There's income tax and ROC approvals which are pending. Now, while there is a good reason to cheer, what needs to be carefully watched for is what the modifications that Zee and Sony will be making, which at present is undisclosed by CCI and Zee and Sony. Now, in terms of brokerages, CLSA says that Zee is trading at an attractive valuation of 15 times its FY24 earnings, and the target price is 316 rupees, while Motilal has witnessing an upside of 16% with a target price of 310 rupees. Back to you.
Take that point, Bahista. Thanks a lot for that. So that's about Zee sitting with a gain of almost 5%. Remember, ended about 7% higher on Tuesday's trading session as well. So 2 days of double-digit gains out there. But the stock which is under pressure is Bajaj Finance. Trades lower as new loans for the company have actually declined sharply in the second quarter. Abhishek joins in with the details on that and what also brokerages are making of the same. Abhishek.
Well, to begin with, as you mentioned, they have come out with their Q2 business update, wherein the new loans have declined by a little more than 8% on a sequential basis. However, AUM growth remains one of the best in last 11 quarters also, given the fact that average ticket size have increased. So average ticket size is up anywhere around 10% YOY and 2.6% sequentially. Now, brokerages have a mixed view on Bajaj Finance. In bull case scenario, they say that, AUM growth is strong, liquidity surplus has reduced, which can help the net interest margin, get supported at higher levels, and significant growth in deposits up about 15.5% quarter on quarter, and it's well positioned for strong growth going ahead. So we have the likes of Jefferies, Morgan Stanley and Bank of America who have a target price ranging from as low as 8,000 per share to as high as 8,500 per share. In the bear case scenario, the analysts say that AUM growth is strong, but loan loans disbursed is weak. So there is divergence between volume and value growth, which is actually leading to higher ticket size. So growth may take a hit as and when, inflation starts to, taper down or come down. If loans are driven by mortgage, now that's a key concern given the fact that mortgage has a low ROE profile of about 11 to 12% ROE. So we have the likes of CLSA who have a sell rating on the stock with a target price of 5,600 per share, and Macquarie who has an underperformance rating with a target price of 5,000 per share. Back to you.
Okay, all right, Abhishek. Thanks a lot for that. By the way, just keep an eye on India Cements. The stock has been very, very volatile. Well, it's popped up in trade yet again, so just keep an eye out on that one. India Cements, the stock comes up for you on the screen. Well, on that note, though, we'll wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.